Sylvia, Caroline made a really good point at the top of the show. You look at the NASDAQ 100, for example, headed for its best week since November, despite sort of the broad risk-off sentiment that we've seen throughout this week driven by headlines.
Hi, Ed. Great to be here. And yes, it was a great point made at the top of the show. And actually, it's something that I've been talking about and thinking about for weeks. So, and prior to the banking crisis here. So in my mind, even if you take away the banking crisis, some of the top FANG companies out there, the top tech names especially, are on the precipice of innovation with ChatGPT. We all sort of know AI and how we expect that to play out. So there's a good reason to invest for that reason alone. But then on top of it, they were battered last year. But look where they are. They still sit with very strong balance sheets. And you have a macro, overhang here of a hawkish Fed that is now shifting, regardless of the banking crisis. So now throw in SVB, you have some, deflationary pressures. You have a Fed that is likely to think about pausing and sort of stopping on the rates. And who does that benefit? It benefits, tech companies. Their cost to borrow becomes cheaper. They can do the R&D. And then
just to jump in on the Fed, do you think that they won't be hiking, therefore, come next week?
Oh, I think that the Fed will likely, I don't know what the Fed will do, but in my opinion, I think, 25 bips is likely to be on the table with a long explanation that is not as hawkish around the idea that they're going to pause and take in the environment and see what happens, because I think there's this massive need now to reinstall confidence in the banking system. And a shock like that and a scare like that actually does have an impact on consumers and investors. It makes investors want to sit on the sideline, makes consumers not want to spend because they're worried about that recession, and so on. So I do think that beyond this next rate hike, it's going to be a much different story than it was a month ago.
So when you're looking at allocating money, have you been this week and into what?
I have, not yesterday when the market was rallying, but I look at the long term as an investor, and the things that I like in the long term are that fourth industrial revolution trade, right? The quantum, the machine learning, and the AI. I continue to allocate there. So when we have these pullbacks days like today's, names, I like to look at a basket of stocks that represents those themes, whether it's semiconductors, the big tech companies. And, in my mind, I'm going to hold those for the next 3 to 5 years, and that'll pay off. And then I diversify too, right? I like defensive portfolios. I like alternative energy, things like hydrogen, the way of the future of how we'll sort of power our cars and homes and things like that. That's a growing trend. And all of these names are battered along with the rest of the market this week. So in general, though, if you're an investor, I think even index exposure is good to pick up at these levels when you get pullbacks like today.
When I think of Defiance, of course, Ed, I think of the ETFs that are related to crypto, and not just the NASDAQ, but boy, what a week for crypto.
Well, I guess, Sylvia, my question would be that there is this high degree of bullishness around crypto or digital assets, right? Yet the world around that industry, the startups, the companies, are under quite severe duress. How do you square that?
Yeah, so, going back to, Caroline, I think we square it by creating a short fund. So we're actually sort of, worried about some of that risk. And we think that a lot of investors in the short term will be bearish. But, that being said, I think it depends on what type of crypto we're talking about. So if you look at Bitcoin, Bitcoin is almost like the S&P 500 of crypto, right? It's the least risky of crypto assets. And I think that with the bank blow up, a lot of investors have viewed that as a good alternative to not have exposure essentially to both government and bank failures and things like that. So it's essentially catching a bid. But I think if you look at the overall crypto economy, it's the same situation as you have with highly leveraged growth companies that are, not the FANGs necessarily, but they're highly impacted by rates. They're highly impacted by inflation. They're very volatile. And when you have, again, a bank collapse and you have an uncertain macro backdrop of recession or not, you're unlikely to have investors piling into those types of names, in my opinion. I think they'll stick with Bitcoin. Maybe they'll look at Ethereum. But I think, the smaller names are probably not going to catch a bid.
Two names that I showed at the top of the show were NVIDIA and Microsoft. And artificial intelligence, despite all of the chaos in the banking sector, has continued to be a theme. At least that's what sell-siders are writing about. How are you positioning to kind of take advantage of momentum in that space?
Yeah, at our company, they're actually two of the top holdings in our quantum basket, which is the machine learning and AI trade there. And I think what we're looking for is just the build out. There's an expected CAGR of about 37% in the next 5 years, strictly off of AI. If you think about how it's going to impact every sector from retail, Amazon being able to target ads and kind of put things back into your basket more accurately, healthcare, connecting doctors, robots research, all of these types of things that we've talked about before, defense, more precise targeting. All of this depends on AI. We know that that's growing out, and Microsoft just really put themselves in the front of the pack there in terms of R&D and investment in the space.